morning, everybody. How are we doing? Morning, Mark. Morning, Wojciech. Morning, Paul. Morning, Gregors. Morning, Evil. How are we doing? Happy Monday. Another day, another dollar. So it's Monday. It's nearly the end. It's the last trading week of April. It's not end of quarter, but it is end of month. So we tend to get quite a lot of volatility end of month, as the markets tend to want to sort of balance their books basically and get those commissions in. So Thursday is 1st of May. So we've got 3 trading days. So Wednesday this week is potentially going to be a big mover. So we'll see what happens. So this morning, we're going to quickly go through, obviously, OLBs, see what's going on with those, go through the news, usual stuff. I've set up the position trading account again this weekend. So I've got to just finish going through setting that up, actually. And I'm going to go through position trading and what I'm going to be doing position trading wise from now, basically. So what I've decided to do is obviously go in kind of manual for the minute on the position trading side of things. Still letting the position trader EA take over the trades and scale in as normal. But as for entries, I'm going to be less reliant on oscillators, RSI obviously for me at the moment, just because this market is not oscillating or not using market structure in the same way as we used to with what's going on with these tariffs. So everything's changing. So we need to adapt with it. So it's just a case of going back to more sort of initial manual entries, really, based on decent support resistance, propulsion moves, price action, usual stuff. But oscillators, as you can see, any kind of normal push-pull is less reliable at the moment. Doesn't mean it's not going to be in the future, but obviously at the moment we're just not quite seeing the same type of price action coming in. So going to go through what I'm doing with the position trader EA. So just looking at the open, we've had quite a big open so far this morning. Market's just opened. We've got 30 seconds left on this initial candle. So this is the initial 5-minute range. So we'll see if we get some entries off of that this morning. I'm playing catch up today. Oh yeah, I switched it back to individuals, didn't I? I didn't on that one. Oh well. Yeah, had a bad day on Friday. The US indices on Friday, really difficult. Very, very rangy price action on Friday. Where are we? So that was the open here. It was just all choppy and horrible. Really, really bad open on Friday. It just whipsawed for ages. We finally took off. But yeah, after the market had whipsawed basically. So there's nothing you could do on Friday, really. It just was a bad day. But we'll try and recover that this afternoon. So no 5-minute ranges at the minute. Too tight still on those. Nearly there on the FTSE. So as long as we break the high and the low of that 5-minute candle at some point in the next 10 minutes, we'll be taking a 5-minute or an OLB on the FTSE this morning. DAX, not, although it looks like there's a lot of movement there. Very small range. And I'm still working on ADR3 at the moment on these. Just check they're both on that, yeah. So still working on ADR3 at the minute. It's not really making a lot of difference at the moment with the indices, ADR3 or ADR10, but I'm just going on the most recent price action just in case it does take off. Then I'll be more reactive basically to what the market's doing. So not a lot happening there. Right, so let's look at the news. So yesterday we had sort of the build up to the Canadian elections, which are happening today. So there's potential volatility on the Canadian dollar all day today. It's difficult to tell whether or not that's going to make an awful lot of difference. I don't keep up with Canadian politics at all, obviously. But the main reason that would affect the FX markets is if one of the candidates, like Carney, for example, has got a a specific stance on finance or what he wants to do with tariffs, which, when they get elected, obviously will have an impact potentially on Canadian dollar movement. So we'll have to wait and see what happens with that. But there's no other news forecast today. So apart from that, it's just business as usual today. Tomorrow, we've got very little news as well. It's a bank holiday in Japan tomorrow. Sometimes the US markets use that as a sort of driver, basically, to manipulate the Japanese yen. So be careful with the yen tomorrow. But the last few times we've had bank holidays, I haven't noticed any difference. So again, things have changed. Jolts tomorrow, that's all we've got there. 3 o'clock. Jolts is very, very hit and miss, especially at the moment with what's going on with tariffs. So Wednesday is the main day that we've got news kicking off. So Wednesday is the last day of the month. So with the, as I said when we started the stream, with the banks and institutional movement, they get paid on monthly and quarterly bonuses. The traders get paid, and so do the organizations. So there is an awful lot of balancing of books that goes on at the end of the month to try and get the targets hit, commissions hit, forecasts hit. So we tend to find quite often the last couple of days of the month we get big ADR moves, just because they're trying to get prices to specific points to get the commissions in, basically, which is what the market makers' jobs are to do. So just be aware there might be a lot of volatility across the board over the next couple of days. It's quite normal. But the main news we've got is the Australian CPI tomorrow. So we've got a forecast of CPI going up short term and down on the annual. Very difficult to say whether that is actually going to happen. Don't forget, this is historical. So we're looking at the last quarter and the last year's inflation. This is going to be very, very different moving forward with the new trade tariffs and organizations we've got with agreements we've got with different countries. So potential for a big upset on this one tomorrow, I think, or Wednesday rather, because that 2.3 drop, I get the feeling if that's going to pop quite that hard, if it does, that could well come out at forecast or possibly even tick up, which means that we would get a big spike up in the Aussie dollar. So there's potential movement on the Aussies on Wednesday. We've got CPI for Germany, which comes out in 6 days. So it's released through the morning. We don't get the final figure until sort of mid to late morning. That's forecast to go slightly up. It's non-farm employment because it's obviously non-farm payroll week. We've got the Canadian GDP, and then we've got the US GDP as well. And then we've got the PCE index after market open. So there's a hell of a lot of volatility on Wednesday. Going to be a big day, potentially. So we might find some movement into that Wednesday move and then a reversal, that old midweek reversal that everybody goes on about. That's usually why it happens, because we have big news coming out midweek. We've got the Bank of Japan rate forecast to stay the same. So again, Thursday, potential big volatility on the Japanese yen. US dollar unemployment, usual. We've got the PMIs coming out as well on Thursday. That's aftermarket. So we've got pre-market and aftermarket. So again, indices are going to be all over the place this week. And then on Friday, it's non-farm payroll day. So we've got Aussie elections as well next weekend. So with the non-farm employment, obviously non-farm payroll, that is a large market mover where the banks put loads of money into the market and get big movements. There's no real reason why this should move the market again at the moment. So the Fed have come out and said in no uncertain terms they cannot forecast what's going to happen with interest rates or inflation because of the tariffs. It's going to be an uncertain year ahead, and there's nothing they can do basically but fall in line with whatever the data says. So the data about unemployment is last month's worth of data. So this is starting to become more relevant now because we've had those trade tariffs for almost a month. So whether that's had an impact on unemployment yet or not, we'll have to wait and see. But obviously, if that unemployment rate there pops to 4.2, there'll be inflationary pressure, lower, less. So we'll see what happens. But I wouldn't say that we're going to get a lot of movement off the back of that. It's really still about tariffs at the moment, although it has gone very quiet. Last week, very, very quiet. We looked at it on Friday, didn't we? Last week was very, very range bound. So we'll see what happens. But That's your week ahead. So it's a busy one. We've got Wednesday and Thursday and Friday, huge news events. So today and tomorrow are quiet. But doesn't mean the market won't be driving itself into specific levels ahead of that news with a view to reversing it. Morning, Virginia. Morning, Elevated. Morning, Unknown Someone. Can we position trade with futures? Don't know. Yeah, you can. You can dollar cost average in futures. You can't increment lot sizes unless you're using micros, but yeah, you can do. Morning, Chris. So that's the forecast news for this week. China's just come out and upset the US. So what was that? Oh, okay. We are not engaged in trade talks with the US. So basically, just China just saying it's radio silence. So both parties sitting there, not doing anything, not budging. Anyway, over the weekend news, really not an awful lot, as you can see, of high impact news over the weekend. If we scroll back, there's very little happened this weekend. This obviously doesn't affect the forex markets really, but Kim Jong-un has decided to deploy troops to Russia and notified Moscow. Yeah, North Korea, no shock there. North Korea aligned with Russia. We kind of knew that anyway because we had Korean troops already there and Chinese troops, didn't we? So yeah, nothing new there. But yeah, apart from that, really not an awful lot of movement over the weekend. There's a lot of talk about the Ukrainian side of things and stuff, but nothing to do with finance really. So it's as usual this week. Keep your eyes peeled on the news. Trump may come out and say something, but we've had a very, very quiet week last week. Very much radio silence. So it's just a case at the minute, I think, of just keeping your eyes peeled on the news. FTSE ORB is in play. Still nothing on the DAX. Way too small, this range on the DAX. There's no volume on the DAX today, so won't be trading that one. But FTSE potentially got a break long or short going on. So let's have a quick look at levels and where we are. So we've still got this gap fill on the DAX available. In fact, most indices have got that gap fill still to do. FTSE has completed it. A lot of the US indices haven't. So whether or not that is going to happen is going to really depend whether we're going into a bear market or a bull market. At the moment, the market really doesn't look like it can make a lot of progress. It is going up for the last couple of days, but it's not convincing. So there's your 15-minute range in, same as the 10-minute range. So we've got an inside bar on the FTSE. So if you want to be aggressive, you can take a break of that candle there, but obviously that is your 15-minute range. So we'll see where we go from there. But FTSE wise, because that's the only thing I'm going to be trading at the moment. Yeah, I mean, we're going to be out into new highs if it does break long. So be watching this area for a break to the upside. Downside, yeah, I mean, obviously that's the lower last week. We've got the low from Friday. So partial there, absolutely fine. If we're going to break long and we are going to put a new high in this week, partial up there is fine as well. So we'll see where we go. Not a massive amount of volume this morning. Right, FX. So as you can see, there's no ADRs today so far. So nothing has moved in the Asian session. We've got nothing hit there at all. Obviously, weeklies have reset because it is Monday. Monthlies are useless to us at the moment because obviously the amount of volatility we've had this month, everything is 200% pretty much of its normal monthly ranges. So you can't really use any monthlies at the minute. We'll see what happens next month, but it's a volatile market at the moment. So it's just a case of waiting basically on that stuff, isn't it? But weekly ranges, I think, are still in play at the moment. we've kind of normalized. If you look at what happened last week, we were very, 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 very quiet. Sorry, that's last week. Previous week and last week, we've very much normalized. So ADRs, we were talking about ADR, and obviously ADR is a lagging indicator like everything else. So we're using ADR 10. So you got 1, 2, 3, 4, 5 last week, 1, 2, 3, 4, 5. So that is the ranges now we're monitoring. So this is all the volatility we had off the tariffs. We've stabilized now and we're back to norms. So ADR at the moment, I think ADR 10, we should be fine with reading. So if you're finding ADR extensions are getting hit, there's a good chance that that will be the norm again now. So we've kind of got through this storm of tariff mayhem. Markets stabilized, but as you can see, very unknown direction at the minute. So markets have calmed down, but they do not know which way to go. So it's a case of, at the minute, we're still going to be looking at where we think the currencies are going to go from a strength perspective based on the new trade agreements that are being put in place. So we've said in the UK, for example, Europe is way more important to us than America. So basically we've said, screw you, we're not interested really. If you're going to muck us about like this, this is where we're going to focus our business. So basically he's lost us. Not really a big loss, not a massive amount of import-export going on there. But we're just one of many countries that has been doing a lot of trade with the US. So the dollar potentially is going to weaken dramatically because the trade agreements that it wants aren't going to happen. So the only people that are going to lose are going to be the US. So moving forward, obviously we can see what's happening to the dollar. Whether that continues or not, we'll have to just wait and see. But if the stock markets are going to go into a bear rally, there's a good chance I think the dollar's going to go with it. So hence me looking at manual entries at the moment, I'd be much more interested in shorting dollar pairs than longing it. So things like that, which worked out absolutely beautifully last week, fine, you can still take those. But if there is something goes dramatically wrong with the dollar, it's going to be a lot harder to get out of long positions than it is shorts. So going with the flow at the moment is probably the best thing to do. And assume that if we are going to do a recovery, and we're going to put a V-shaped recovery in on all the moves that have happened off these tariffs, for example, they all get undone and the world goes back to normal and we will go, don't worry about it, Trump is fine. Unlikely. But that is what we would get, a V-shaped recovery. So we would reset back to the origin of that move. So planning, if you're going to short this, for example, you need to plan to scale in all the way back up to there if this thing just suddenly goes like that. Yeah, so it's about planning really where we think price is going to go now, rather than normal price action, the normal market structure we see, which allows us to get in and out of trades very easily. At the moment, it's planning for worst case scenario, which is a sustained push all the way back to the origin of that move. So if you're going to hit the short button, well, worst case scenario is always what you want to plan for. So basically what I've decided to do with the position trading side at the moment, ADRs obviously are still an entry criteria. RSI extensions are still an entry criteria. There's very little RSI extensions we've had that have just been normal ones which have undone themselves. So what we're finding at the moment is we're getting these big extensions on RSI, and this is true of all oscillators, stochastic, CCI, MACD, wherever you want to use, it doesn't matter. They all do the same thing. They oscillate price with price. So as you can see, that one there, what we've done is we've pushed up and we've stalled out, and we have reset back to midline. We haven't actually pulled back though. So the way we use this normally is, and there's another great example, but that's obviously the tariffs. When you get extended, because this follows price normally, what would happen is you would get a pullback. That's where we would exit. But what we're seeing is a lot of this movement, more flag breaks. Yeah. So, and this one is a great example. More of that. Yeah. So it's divergence, which means that there's potential for a continuation on this. So this is not as reliable. Support resistance does still seem to be working. So where we've stalled out on price, we are still getting reactions, but they are a lot less reliable from a distance perspective, i.e. driving far away from there, i.e. this is where we sold from last time. This is more where we profit took last time than entered. So it's difficult to call entries at the minute. Price action is really the best thing to go on. So reversal alerts and retests of reversal alerts still going to work. Market structure is still working intraday and short term, but long-term direction is the thing that we can't forecast at the moment. So what I'm doing is I am currently focusing, and this is what I was doing before I came on a core of seven FX pairs, which gives me good diversification. They are non-correlated pairs, and I will probably add more in as I go. But for the moment, what I'm focusing on is Euro Pound. I'm just getting these up here. Pound US dollar, Euro Swiss, top, Aussie dollar, New Zealand dollar, my friend who goes into squeezes, Aussie dollar, US dollar, Swiss yen and Euro CAD. There, Euro CAD. So that's my core sort of list of pairs at the moment, which I'm going to be focusing on. The reason for that is we've got exposure on the pound and exposure on the US there. The Euro US and the Pound US move very much the same. So there's no point in me trading the Euro US dollar and the Pound US dollar at the moment, because all I'm doing is I'm doubling my exposure on any US dollar pushes and pulls. So if we look at, for example, the Pound US dollar, and you look at the chart on the Pound US dollar there and what that's done, and then you look at the Euro US dollar, it's the same. Not the same, but very, very similar. And the reason being is because the movement you can see here caused on the chart is this thing going up and down and being manipulated. So it's the US dollar which is the focal point at the moment. So if you're going to trade the Euro US dollar and the Pound US dollar, you're really just trading double exposure on the dollar, which is pointless, because you're just going to get yourself, yes, if it works, brilliant. If you'd have got that lovely reversal retest on the Euro US dollar, you'd have also got that lovely reversal retest on the Pound US dollar. Well, you wouldn't actually, you'd have got the second leg reversal on it. But it's the same thing. If that had gone wrong and gone into drawdown by 3 ADR, you're going into drawdown by 6 ADR. Yeah. So it's just about getting the exposure limited at the moment and sort of, if you like, pussyfooting back into it to get back into the position trading side of things, but very, very cautiously, because I don't think this trade war is obviously over yet. It can be over very easily, but it isn't. So what we don't want is for him to suddenly come out and go, right, China's not playing ball. Sorry, the rest of you, I put the 90-day pauses on. We're scrapping the 90-day pauses. This is what we're doing. We're just going to go crazy again. If we're going to go crazy, we're going to go into drawdown, or we're going to go into huge profit. Whichever way we go, I do not want double exposure on stuff that goes to drawdown, because it's going to be very, very painful. So using very low risk, 0.2% entries on the initial trades, and just focusing on stuff that is non-correlated. So Pound US dollar there, Euro CAD, that gives me exposure on Canadian dollar commodities, and it gives me exposure on the euro. The Euro Pound is very rangy most of the time. If we are going to be trade partners, stronger trade partners than we were, i.e. go back to before Brexit, we are going to find this very, very rangy. The ADR is very, very small on it. So this is a pair that I would like to trade ranges on. So propulsion gap retests and weekly high-low bounces. Perfect. So if it's going to, you're going to get the odd one, you know, this move here was when, actually it was one back, wasn't it? Yeah. So this move here was because the euro had to find its own defense budget. Yeah. So massive bond sales. This is just going to happen. You can't do anything about that. But most of the time, what you're going to find is it's going to be very rangy. So this is the sort of thing where we're going to scale into one, maybe two positions and out type thing. So a rangy pair. Euro Swiss gives me exposure on the Swiss franc. So this is a safe haven. So whenever we're getting safe haven runs, obviously, you're going to get very big, strong moves. So if we can get into something in the right direction and hold it, these are going to be very profitable. And also exposure on the Swiss yen, which gives me yen exposure, safe haven, but also Swiss exposure as well. So this one tends to go very rangy when there's a safe haven run. Yeah. The movement on this will be much more contracted. So the reason I've chosen the Swiss yen is because if we get a safe haven run, this is not going to explode because both of these will get pumped at the same time. You will get an advantage with one of them, but it won't be very long and it will obviously undo itself, as you can see on the chart here. So this is the sort of thing you shouldn't be in for more than 1 to 2 weeks at a time, in theory. So scaling into Swiss yen, ideally, I only want to be going long on this because the shorts are expensive, but it's only 13.83. So if you look at all the other yen pairs, the reason I've chosen the Swiss yen is because all the other yen pairs are way, way, way more expensive to hold. Euro yen, for example, 26.60. Pound yen, probably the most expensive thing on the planet at the moment, $40 in swap costs to hold this. So Swiss yen gives me good yen safe haven exposure and Swiss exposure for safe haven, but it's the more contracted of those currencies. Aussie dollar, US dollar gives me Australasian commodity exposure against the dollar. Euro CAD is the Canadian commodity exposure. And Aussie New Zealand, these are both commodity pairs. I think this has been historically a very bad instrument to trade in the past. But the reason I found it very difficult to trade in the past is because I've always had other exposure on the Australian dollar or the New Zealand dollar at the same time. But what I wanted was some New Zealand dollar exposure. All the other New Zealand dollar pairs give me very high correlation with something else in that list. So if I trade any New Zealand US, New Zealand yen, pound yen, euro, New Zealand, euro pound, I'm getting it wrong. Pound New Zealand, euro New Zealand, they give me very, very similar exposure to some of the other pairs, sort of 70 to 80% correlation. So this is the only New Zealand pair that I've got available to me that I can get some decent exposure on without getting highly correlated with something else. So it's all about, for me at the moment, looking for diversification. I don't care if everything I go into goes into drawdown. What I don't want is everything to move at the same time in the same direction. Yeah, and that, by getting those pairs covered, that gives me that little bit more safety net, if you like. It is going to limit profitability dramatically, but it's also at the moment, I think, more important to limit exposure. So, and again, as you can see here on the hourly chart, it's not really moving dramatically at the moment. We are getting some movement and then we're getting some pullback. So it's usually quite sort of, it's a little bit like the euro pound in that it doesn't move dramatically quickly, but when it does move, you get a decent move out of it because it's usually one of them has got news which drives it for 48 hours. But these will both move at the same time if there is any issues with US dollar. So because these are both commodity pairs, they're linked to the commodities market. So when the commodities markets move, these move. So if the commodities are getting hammered or pumped because of what's going on with trade tariffs, these will move at the same time, which will give you that kind of price action, not that. Yeah. So this obviously was the initial shock. I mean, everything moved on that. There's nothing you can do about that. But it did undo itself. Yeah. So again, it's all about being able to survive this type of movement. Yeah. So I've got the EA set up on the VPS to take, there's no trades today so far. I've got the EA set on the VPS to take additional entries for me at the moment at 3/4 of an ADR apart, but I'm going to be looking to use the buttons basically. So, and obviously entries will be on 3-bar reversals and reversal alerts. So anything that is a reversal alert, the EA will enter, and any 3-bar reversals like that, the EA will enter as well. So that's a perfect textbook 3-bar reversal. That's what it's going to be taking. That's what I'll be taking as well. Or anything I see that's like, you know, stands out obvious. Yeah, price action. So if we get up to here in this propulsion move, which they've sold twice, and we get to there and we get that, I'm shorting it. Yeah, whether it's right or wrong, that's where I'm getting in. And then it's a case of looking at where are we going next if that is incorrect as an entry. So if it's not right when we get here and we bounce out of that propulsion gap, that's the next entry, but that one is a better distance. That's 3/4 of an ADR away. So the EA will look to get me in at that area. Then we'll look to get in again at that area. Yeah. So it's about spacing at the moment and staying more in line with support resistance propulsion moves than it is just using oscillators to get in historically, which has worked incredibly well, but at the moment isn't as reliable. So you've got to basically adapt. This could well be absolutely fine. Yeah, oscillators will be absolutely fine moving forward for the next 6 months. Maybe, maybe not, don't know. But right now, my gut is telling me that this isn't over, and I'd rather be more cautious. So we've got short-term profitability available on the indices to just milk quickly money as needed. Long term, there is no directional bias. Position trading is all about the markets having an understanding of where price is going. Yeah, and this is why price action and market structure works. The markets go, right, Aussie, New Zealand, the Australian dollar is increasing interest rates, the New Zealand dollar is freezing interest rates, and inflation is falling. Therefore, we have a stance of bullish Aussie, bearish New Zealand. The market will buy it, take profit, buy it, take profit, buy it, take profit. Yeah, this is the norm. At the moment, there isn't any FX currency you can look at from a market perspective and say, this is going to happen. There is no way to forecast the future when you've got an idiot driving things like this. It's just not going to happen. So banks and institutions at the moment, as you can see, are in massive fear mode. They're pulling money out of the stock market. They're putting it into the yen and the Swiss. They're keeping it safe because they don't know which direction any currency on the planet is going in at the moment. So when you haven't got that certainty of direction, you're not going to get normal market structure. You're going to get odd price action, which is going to be driven by fear or driven by greed. Yeah, but it's going to be driven quickly. That doesn't suit position trading because position trading is about riding market waves. The market isn't waving at the moment. It's flying up and sitting around and waiting for the next news event. Yeah, that doesn't work. So it will work if we just get in, but not just go, right, I'm going to take another short above there because a distance has been reached. It's nothing to do with distance. Distance doesn't matter. What matters at the moment is where are we reacting? Yeah. So when the market was in shock, it managed to pull back 50%. If it gets back up there again, it's probably going to want to stay range bound because it's got no reason to go massively bullish or massively bearish. So reacting at price points, weekly highs and lows, which is what the support resistance propulsion indicator is all about, is identifying areas that price has reacted to at in the past. Yeah, that's what I'm going to be focusing on. So you can either use the position trader EA or you can use the zone trader EA just to place areas at zones. But personally, I'm more interested in price action. So on 4-hourly and hourly charts, if I see something that looks good, I'll take it. So it doesn't mean necessarily that I'm going to be limited just to these pairs. Yeah. So that's what I've got as my focus because I know they are non-correlated diversified pairs. They're diversified on type, either commodity, finance, etc., against the US dollar, and they are non-correlated, i.e. they are not moving the same as another pair. But if I've got the pound US dollar on my list and I'm looking at it going, doesn't look like it's doing much, and I flick over to the euro US dollar and I see a 3-bar reversal on the US dollar at support, I may well just take a euro US dollar long, and then I will go, I'm not going to trade the pound US dollar because it's 90% correlated with the euro US dollar. So the pound US dollar just comes off my radar until that euro US dollar trade is out. When it's finished, I can go, right, I'll go back to the pound US dollar. I've only picked this because I prefer it over the euro US dollar. personally. But it doesn't matter which of them you trade. But all I'm saying is don't trade both at the same time, because you're just double exposing yourself to the US dollar movement. Yeah. So I will flick through all the pairs and go, yeah, really like Aussie dollar Swiss as a short. I'll take a short on the Aussie dollar Swiss, which will mean that I will not trade the Euro Swiss. Yeah, so I'm just trying to limit that exposure down so that I can survive longer in a squeeze if it happens. If it doesn't happen, it doesn't matter. But at the moment, it's worst case scenario is what we need to plan for. So, morning Marco, morning Peter. Evil risk is at 0.2%. Yeah. So yeah, 0.2%. And as I said, it's just about easing in. So that's my risk, 0.2 over 1 ADR. Using a low multiplier as well. So if you're in the members stream, which you were, Evil, I did a session on lot multiplication and how it affects your drawdown potentially. Obviously, it's the difference between a 1.1 and a 1.2 is 2 to 3 times the drawdown over a period of weeks. Yeah. So keeping the risk low. Yeah. What I want to be able to do is say, right, okay, I'm going to go short on this. If you are going to push all the way up to there and you're going to move 5 ADR against me, I do not want to be in pain on 5 ADR. I want to be able to sit through 6 ADR, 7 ADR of movement against me. Yeah. So this here, this move was the initial move was 528. So that is just shy of 10 ADR. Yeah, about 8 ADR, 9 ADR. This is a 4-hour chart. So that was what, 2 weeks? No, that's a week, isn't it? Sorry. In 2 days. Yeah. You need to survive this. Admittedly, you wouldn't get in here and scale in here because you will have no reason to scale in. There's no bull moves there. You're not going to buy anything in there, are you? Because there's nothing, even if you look on an hourly chart. There was absolutely, I mean, you had one bullish engulfing there. So let's say you took that bullish engulfing after your initial entry was taken here, for example, I don't know. It was 3 ADR before you even got a bull candle. So realistically, your scaling is going to be there. You probably had one in there somewhere. There was no exit until you got down to here. And then you got out. But the only reason you got out was because Trump said, I'm going to pause tariffs. Yeah. You're trading the Trump chart now. Yeah. This is not banks and institutional price movement. This is Trump manipulating all markets by saying stuff. So quite rightly, you get the shock and awe and then the holy crap, what do we do next? I don't know. Right, we'll just sit here and wait then. Yeah. Trump. Shit. Trump. That's it. That's what you're trading. So you're not going to get a chance to scale in normally, which is why I've got the EA set to scale in 3/4 of an ADR apart, because if it does normalize-ish, the EA will just take over and it will just go, right, just in a 3-bar reversal. We're 1 ADR away from the initial entry. Let's get in. I might be asleep when that happens. So the EA is still going to be scaling in for me. But on moves like this, it's not going to scale in because there is no price action. So the reason I'm not using a moving average cross, I'm literally using a 3-bar reversal signal or a reversal alert. That's it. So if we don't get one of those and price is not closed above the next entry distance, I'm not interested. I just want slow, gradual entries and control the risk. I'm also considering actually trading a commodity alongside these as well. And I'm also considering trading an index, but that's kind of the very back of my mind at the moment because indices, I've just got a feeling we're going to go into a bear market and there's a lot of money to be paid in a bear market because the volume and volatility is much, much higher in a bear market than a bull. I still think we're potentially on a pullback in a bear market, but I'm not brave enough at the moment to stick my money behind that theory. So oil, I can't see oil recovering at the minute. So oil, I'm really looking at potentially taking shorts on. It's very low swap to hold the thing, but I can't see any reason why oil would spike unless, and this is the other issue we have, Ukraine gets sorted. And Trump and Zelensky are very close, I think, to a deal on land that would put the US into Ukraine, which means that will de-escalate, which means oil flow will increase and be more readily available. But if that is the case, it could well drive oil prices down, because the flow of oil will obviously be bigger, which means that obviously there's more supply, which means demand is not changing, drops prices. So I kind of like the idea of shorting this down to $50 a barrel at the minute. If you look back historically, $50 a barrel is just not something we do. So $50 is all the way back here. Yeah, this is going back to obviously COVID. Yeah, so this is pre-COVID. $50 a barrel is kind of your artificial floor in oil, because the cost of production means that when you sell below $50 a barrel, you might as well stop. So what they tend to do is turn off the derricks and go, well, until the stock's gone, there's no point in making any more, because we're selling it at a loss. So what they do is they turn off the derricks or reduce oil flow, which means that the barrel count drops. If the barrel count's dropped, the prices go up. So $50 becomes your artificial kind of floor. We're on the way there now, look. So I really like the idea of oil back down to somewhere in the region of $45, $50 a barrel, but 40 to 50 maybe. But obviously, as you can see, if something happens with Ukraine, you could easily be back up here again. So, all markets at the moment are very, very difficult to call anything on. And I don't think any bank or institution or analyst has really got any clue as to where we're going next, because it's just too fluid at the moment. All markets are just reliant on these tariffs. So, let's have a quick look at this index. DAX is dead in the water today, so there's just nothing on the DAX. So we popped our head out the 5-minute ORB, but really, I mean, it's bullish, but not very bullish. FTSE's just going nowhere. Can't do anything with it today. Markets are scared, but anyway. Right. If I see correctly, you are using 0.1 and not 1 as a multiple of ADR for stop. You're correct, yeah. Well, this is yeah, good point. That's me doing a typo this morning. Yeah, it's 1, not 0.1. I would notice that because I would go into drawdown very, very quick. But yeah, one ADR. I literally just set this up before I came on stream. Let me just save that actually. Literally, as you can see, 6:22. I set this set file up this morning. So yeah, so 1 ADR basically for 0.2 risk. Right, so I'm going to whiz through all the pairs this morning and see where everything is. Just save my profile quickly. So as I said, there's no ADRs, there's no RSIs at the moment. It's all just flat. Everything is flat. Everything's kind of reset. Last week was just, as you can see, totally sideways on most stuff. So, I'm going to whiz through all the pairs, have a look at where everything is, see if there's any goodies, decent entries at the moment that might be worth having a look at getting into. But obviously for movement this week, we've got Russia can provide military assistance to North Korea as well if needed. Oh, isn't that nice? So as you can see, we've got no news today, nothing really to move the market, very little tomorrow. We've got jolts tomorrow afternoon, but that's it. So we've got 2 days really of very little. So I think what we're probably going to find is we may run for a high or low of week. This, which is basically going to be roughly an ADR. You can see the whole thing moved roughly an ADR last week. So, yeah, that's really all I think we're going to do. So unless something is approaching a decent support resistance level, I don't think there's really much I want to get into at the moment. So we'll start off there. If there's anything specific you want to look at on FX, let me know. Short FTSE. Just not moving, is it? Rotation today. Right, so I'm just going to start off with those core pairs that I'm focusing on at the moment. Aussie, New Zealand, obviously, there's very little going on. So first area really of interest is up here. So this propulsion move we had to the downside, they re-sold that, and then we retested it. And as you can see, sellers kicked straight in. So we know there's a bank order sitting there, which is that one that got driven down. So ADR hit to the upside today, Aussie, New Zealand. Be interested in shorts on it. But at the moment, it's just kind of flip-flopping around, not really doing an awful lot. So last week's sort of low, it's going to take a fair bit of movement to get down there. But as you can see, we are obviously in a big downtrend at the moment. So all commodities really are getting stuffed. So nothing much going on with that one at the minute. Aussie dollar, US dollar, very, 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 very sideways. So these kinds of trades, if you think what I'm risking at the moment, which is 0.2 over an ADR, if I get in long here, for example, and then trade it all the way back up to the range high, I'm going to make 0.2%. Yeah, difficult to make money when the market is like this, when it's sideways, but there's very little you can do. If you increase risk, obviously you make more money. But if it goes against you, you're going to go into a lot more drawdown. So limiting risk is entirely personal. If you want to just trade like this, 6 or 7 pairs, and go in at 0.5% risk over an ADR, do it. Just know that obviously if everything goes into drawdown at the same time, it's going to be a lot more painful. But I've only got half my capital in this account. So I have got the option obviously to top up, but that means I'd be in 50% drawdown by the time I need to do it, which is obviously not a good thing to do. So, yeah, so at the moment, looking at buying up the lows, there's a couple of areas from the previous week really here that we kind of tried to come back to and rebought. It's ever so slightly bullish because they've ever so slightly bearish on the US dollar. But I think there's a very good chance that something will happen to rally the US dollar over the next week or so, which will drive this back down into that propulsion gap. So I can trade this in either direction very easily. But at the moment, all the time it's sitting in a symmetrical triangle like this, I'm not really interested in getting involved. We are just in contraction at the moment. It will explode at some point. That is probably when I would maybe look to get in on that direction. So if we do break down through these propulsion gaps here and we retest that level there and we manage to break it, I will probably look for a pullback short on it. But at the minute, it's completely directionless. So you're literally going to flip a coin. If you press the buy or the sell button on this now, you got a 50-50 shot. I mean, you've always got a 50-50 shot, but it's just not a very good 50-50 shot, is it? There's literally could go either way. We don't know what the guy's going to say next, do we? So there's nothing I can do with that. Swiss yen coming down nicely at the moment. So we are in a nice little bearish movement at the moment. So you've got nice market structure to the downside. Yeah, all very nice. Normal, should continue. There's no reason why it shouldn't continue to the downside. We've got the yen interest rates this week. So if we are going to start to push money back into the stock market, that's going bull. If the US dollar is going to rally and we're going to get some more money coming into the US dollar, the Swiss franc is going to reduce because all the money at the moment is, as you can see, is held in the Swissy and the yen as the safe haven run. And they are starting to undo that. So if the safe haven run is completely reversed because the market gets confidence again, there is no reason why we shouldn't be back down here. So that looks like a good short at the moment. It's expensive, but yeah, no reason why it shouldn't go that way. If Trump opens his mouth, though, and devalues the stock market or the dollar, that's where you're going. So just be aware. But right now, it looks like a lovely short. We've just had a reversal alert and retest on it. The reversal alert has only been caused by the gap down this morning, but I mean, it would have gone down there anyway, as you can see. So potential just to jump in short on that, but I'm not going to take it myself at the minute. Monday's just going to kind of wait a little bit and see where we go. But yeah, looks like it definitely wants to run short. The other thing that may be happening this week, let's just have a quick look at the other yen pairs while I'm on it. Yeah, this is, I was looking to see if this was yen strength, but it's not. So this is basically, looks like Swiss franc weakness at the moment. Aussie dollar Swiss slightly pushing up. So not very convincing trade, but if you look down 15 minutes, it's just a dodgy reversal alert as well, isn't it? Because of the gap down. So I'm going to leave it for the minute, but it's selling off nicely. So there is potential short on that one. Euro Swiss. So we've come off this resistance, pushing up hard at the moment. So lovely reversal and retest, drove it up for the last week. We've just had that reversal and retest gone in. So potentially we're looking for a lower high to go in this morning, although that seems to be rallying quite badly, doesn't it? So the Swiss franc obviously is what's being sold off here, which is why this move's underway. So again, good reason to go long on this or short on the Swiss yen. We know that the Swiss is being sold off at the moment. I get paid to go long on the Euro Swiss as well, which is quite nice. But we just had a reversal of that. So I'll see what happens with that one today, but kind of like it personally as a short at the minute. But the question really is, isn't it, at the moment, this is the difficulty with trading at the minute. Are we moving back to the origin of the move? Is the market regaining confidence, and are we just going to undo this Trump move? If that's the case, then you just want to be going the opposite direction to what we've had for the last 3 weeks and just hold it until we get there. So price action, you've had a reversal alert on that this morning, 3-bar reversal as well. I've missed it, so I'm, no point in jumping in personally for me now because it's gone. But looks pretty good, doesn't it, for a push? But you're only going to get roughly 2 ADR out of it. So euro pound totally sideways at the minute. Really nothing much you can do with this. It's not going anywhere. Big sell off this morning. So yeah, I mean, that does look pretty good, doesn't it, as a short. But you are shorting into support. So I would rather get in short on this on a pullback. So not really interested in that one either at the minute. Euro CAD, sideways, totally sideways for 3 days. Again, nothing much you can do with that at the moment. Much more targets to the downside than upside, but that is where I'd look to short it. If we can get back up into that propulsion gap, resistance, love to short that if we can get there. So I'll be keeping an eye on that for shorts, Euro CAD. Pound US dollar, again, sideways for 3 days. There's absolutely no point in pressing the button on this. It's just sitting there doing nothing. 3-bar reversals. For those in the member stream, you don't take 3-bar reversals in the middle of a range. You take 3-bar reversals at the high or the low of a move. So it's a price action signal, but it's a pointless one. So again, with this propulsion gap, support rectangle, ADR, touching out of yesterday's highs and lows and previous day's highs and lows. So that would be a good area to short this, buying it down at the previous lows. So as you can see, everything is like ADR is looking much more usable now because we've had this kind of contraction back down in price now. So when we get to ADRs, if that ADR is at a point of interest, definitely worth having a go at, isn't it? But we've got this horrible, if we're going to return to the origin of the move thing, it's a long way to go, isn't it? A long way to go. So I'm just cautious about getting stuck in drawdown on some of this stuff. Oil, yeah, I can't sell it where it is now, but if it was to get up into these highs, I would be happy to scale in up to the gap fill. So that would be lovely. A scaling up to that gap fill and then continue down to $50 a barrel. Big money. But yeah, not really getting involved at the moment because we are literally sitting there doing nothing. So ADR today is your weekly high. Lovely short opportunity. ADR to the downside, potential bounce. This is the undoing of the 90-day tariff pause. Basically, that's the tariff pause that was put in. And that has obviously given the market confidence, but not buying it, are we? We're just not selling it off anymore. Yeah, so it's just sitting around. Again, everything's stuck sideways. So the best thing to do when you're stuck sideways is just keep selling the highs and buying the lows until it proves you wrong. If it proves you wrong and you buy the low and then it comes out, you carry on buying all the support on the way down to wherever it's going to bounce from. So it's just going to find a new range to form at some point, potentially. Aussie dollar CAD. So again, nothing you can do with that. It's totally sideways. Range highs, range lows. I mean, the range low today is ADR. The range high today is within ADR. It's just not moving. I mean, you literally... this is an absolutely beautiful thing to look at on something like a 15-minute chart right now. Yeah, so just looking at the indicator, drawing the lines all over there. You know, sell this and buy this. Yeah, but don't expect to go much further than half an ADR to 3/4 of an ADR. You're just not going to do it, are you? In a minute, it's not got any legs. But we've got news coming up, so it will potentially move on that or not. You know, this is the thing. News is not moving the market at the moment, is it? Aussie dollar Swiss. Again, we are pushing back up. So there is your propulsion move to the downside after breaking the low. That's Trump, obviously, and his tariffs. If we are just grinding back to undo and go back to the origin of the move, you just want to stay long on it, but it's going to take you weeks potentially to get there. So it's a very sort of thing where if you're trading intraday, just buy it every day, and then the next day you buy it again and wait, get out, then buy it. If it doesn't work out, buy it again, wait, get out. Yeah, it's that sort of movement at the moment. It's almost like you want to just press the buy button on everything at the moment after the drop, and then just keep buying it. It's like buying the dip, but just do it once a day, scale in and wait for that move to happen if it is going to happen. But the danger with that is obviously Trump could dump this again. Trump could come out with anything and that Swiss franc is going to go parabolic. So dangerous at the moment, markets, all of them. Aussie yen, that's pretty much back to where we were. So that was the range low we were looking at here. That's Trump's announcement, and there's the continuation move. So we've just filled the propulsion gap, which they were reselling after that move out of the range. So are we going to get back up there? That's the question. So at the moment, market structure, as you can see, is lovely and bullish. So we had a lovely reversal alert. We're pushing new highs. We're pushing new highs. Stuck a little bit in a range at the moment, but buying out of that propulsion move is probably a good looking long at the moment. If it doesn't hold, we're looking to come back down into this area here, which is the previous resistance, which now is support. And that is that propulsion gap that pushed back up into this area here. So again, market does the same thing over and over again. Where the sellers were, we sell. Where the buyers were, we buy. Yeah. So at the moment, that is the profit take leg, if you like, of the Trump move. That's the un-Trump move. So at the moment, because we've gone slightly bullish, you buy it. So buying any dips at the moment is the best thing to do because we're kind of just grinding back up into these propulsion gaps. But again, it's a safe haven, Aussie yen. If anything goes wrong, they will buy the yen. So sideways. Again, market's just sitting sideways. What should we do? Don't know. Wait till he opens his mouth. This is basically what's happening in banks and institutions at the moment. The analyst desks, they're coming over and saying, what's the fundamental bias on the Australian dollar at the moment? They're going, don't know. What's Trump saying? There is no thing you can do. There's no table, spreadsheet, calculation you can do to say what should happen to the Australian or the yen economically moving forward, because he will change the stance of the Australian dollar or the yen whenever he opens his mouth and decides I'm going to put 30% tariffs on the Australians because I don't like them today. All of a sudden, the Australian dollar is going to dump. Nothing to do with the Australian economy whatsoever. But he's got that much power that we will just move where it's said. So all you can do at the moment is go with the flow of what's going on, but keep your risk low in case of a Trump event, basically. So you just got to be able to survive them. CAD Swiss, sideways for the last 3 days. Again, looking to push back up into these propulsion areas. So long today has already gone. You've had that reverse alert and retest this morning. You have got a lot of propulsion gaps to the downside. So there's a lot of buying at the moment on this. We've sat around for 2 days. So it could be this week that they decide to retrace it. But at the moment, it looks like it's going long again. So pushing up into that area there, and then that would be a good looking sell opportunity when we get back up into there. Don't forget the Canadian elections going on, so there could be something that really drives the CAD today, so just be aware of that. CAD yen, very much sideways, again looking for a push up into propulsion. This is really rangy. We are just literally bouncing off these range lows at the minute, so you're looking for range highs at the moment, which are kind of up here. So I'd be very interested in shorting out of there if we can get there. But I want to see it up there first. It may well just hit that area and dump out of there. It could come down to here, obviously, and we're going to put in a lower high. So again, we've got a kind of contraction play going on at the moment, which means it's a really good short. But if you're thinking this is a range, you're going to be buying this now. So again, there's always only ever 2 decisions to make. If you are the type of person that likes to trade wedges, you're going to short it. If you're the type of person that likes to trade ranges, you're going to long it. What's right? What's wrong? Whoever takes control of the market, you don't know. So plan for it. So if you're going to long this, view to getting up there, plan your scaling back down to here and hope that it does another bounce before it breaks out those lows. If you're shorting it, you get in now because you're in a lower high situation. You might need to scale in one more time up at that propulsion gap. But if you're wrong, you need to plan to scale in up to there, which brings your average into here somewhere. And then you wait for that range bounce to come off the highs, and then you get out on that. So one of those 2 is going to happen. Euro odd, sideways at the minute. Holding this propulsion gap very nicely, but weakening. Again, sideways. If you look at the last 2 weeks, we are just not going anywhere. It's not conducive for me at all as a chart to trade because there's just no movement in it. I need more than an ADR to make money, and it's just not doing that at the moment. So it's absolutely no use to me at all. Euro yen coming out of a sideways range, broken to the upside on Friday. It has pulled back down inside there again. Again, yen strength potentially coming in ahead of those interest rate decisions at the end of the week, but we'll wait and see. So it's a good looking range high we're at the moment. So all this area here, historically, we've been selling out of. Yeah, and we're back up here again. So this looks good at the moment for a short. We've got an RSI extension on the hourly from Friday as well, which obviously if you took that has played out. Your reversal alert. Oh no, you haven't. You wouldn't have even had a reversal alert. Look, it's down there on the 15. So it's parabolic move to the upside. So that was kind of on the 5-minute chart. There's a reversal alert in there, although it's probably gone. Ooh. I've just loaded this account for the first time on here, so it's not got data on the 5-minute yet. It will load in. So yeah, looks lovely for shorts at the moment. Just got to be careful they don't rebuy that propulsion move there. That is a very nice strong break on Friday of the previous high. Yeah, so there's a good chance, as they did there, they'll rebuy that. So you're shorting into potential support. Euro New Zealand, again, sideways. It's a lovely, lovely little low, but it's just grinding down. So Euro really, really getting hammered at the minute. Or not getting hammered, just not getting anywhere, basically. So, yeah, again, not really moving anywhere. I'd be interested in shorting out of these highs here. So this propulsion gap at the moment is holding nicely. That would be an interesting first entry. Argument for getting in here as well, and then selling that one off. But I don't really want to long it at the moment. I'd much rather short it, so wait for it to break up. Getting short. Euro US, sideways, can't do anything with it. Again, same as the pound US, which we've kind of already looked at. We're just sitting around sideways for days. They're the same thing. Nothing moving, is there? So lovely looking support here. So we got a nice bottom that formed last week 3 times. If we get down to there, intraday, you've got a good looking short. So drop down to the 5 minute. You've just had a reversal alert on that, but it's not at support. Yeah. So down here, you see the weekly line, 2-day low, yesterday's low. That is a lovely looking support at the minute. So that'd be a good place to buy it. Selling it, you got yesterday's high and previous day's high is pretty much the same in that propulsion gap there. And then you've got resistance to the upside there. So if you get in and short that, you can scale in there for an exit. But again, it's not doing anything. It's sideways at the moment. Market's stuck, shocked, doesn't know what to do. So we're going to sit around and wait for something. But don't forget, it's the end of the month. Yeah, we could have some really big moves coming in the next 2 days where they're just trying to get to targets. But, you know, this is the first month we've had a month end where we've had the tariffs in place. So it may be a case of there is no movement needed. It's all been made. We don't know. You know, it's the same. It's not the same as normal this month. It's all different, isn't it? Everything's changed. Pound odd. So yeah, it's getting up to exactly where you want to short it right now, isn't it? Yeah. So where we are, it's 15-minute chart's probably best for this one. Shorten it somewhere above ADR today and buy it somewhere below ADR today if you get there. Just keep doing what it's doing until it proves you wrong. At the moment, it's range bound and it will stay range bound until there is interest in breaking. Nothing's changed fundamentally over the weekend that should say the pound is stronger than the Australian dollar or vice versa. So assume we're going to do the same thing until we get some news. So yeah, good looking short. You've got a gap fill from, when was that? From Wednesday, although it's Australian dollar. So I'm always wary about Australian gaps because it just gaps massively at the overnight swap. But 125 ADR is your high. Anywhere above ADR is a gap, but is that gap completion? So that's a really good looking short up there. Bear in mind, it's expensive. It doesn't work out. So hourly, and this is the difficult thing at the moment. We've got this huge propulsion gap, and then we've got this one up here. So target wise, if you look at where we are from an ADR perspective here, realistically, that is as far as you've got to go if you're going to complete the fill to the upside, which is 567 pips. It's 165 ADR. So you're looking at roughly 4 ADR up to there. So that's a scaling of 4, maybe 5 entries. It's not going to happen in 24 hours. It's going to happen over days and weeks now because this is the new norm. So base your movement on the new norm. 125 ADR to the upside is still a big move. So that's a really good looking short. Might settle a little alert on that myself, actually. Actually, I don't need to, do I? Because I'm going to get an ADR alert anyway. So yeah, I'll be keeping my eyes, excuse me, peeled on the ADR dashboard today. Because there's quite a few things that are setting up, which should be good to take when we get ADRs. So be looking for 3-bar reversals and reverse alerts on 5-minute timeframes for initial entries. Try those. Pound CAD, sideways. Same, just broken record at the minute. ADR to the upside means we've made a new high above last week's high. ADR to the downside means we've tapped into last week's low. So yeah, again, same thing. If we can get to these levels, I don't think the market's going to have enough momentum to rally further. So I found an older Brit guy selling his RSI 2 bot YouTube. Gave him grief, called him out for ripping it off. Thank you, Franco. My RSI, it's not my RSI 2 bot. I haven't got an RSI 2 bot. RSI 2 is not my strategy. RSI 2 is not Larry Williams. Yeah, it is Larry Williams' strategy. Was it Larry's? Can't remember. Not my strategy. But if you want to send me a message, Franco, I'll give him some grief as well if he is copying something I've done, because I've got a video up there. Larry Connors, that's it. This is, I hate trading names. There's too many Larrys in trading. There are too many Larrys. There's only 2 of them, but I never know if it's Williams or Connors. There's probably other Larrys, obviously, that have traded in the past, but they're the famous ones, aren't they? So, yeah. But yeah, I've got a video on YouTube about RSI 2 in forex, but there's nothing. You know, this is what this industry is notoriously tricky to navigate when you are a content creator, because everybody calls you a rip-off merchant. But if you think about it, there's very little you can do on a chart. Yeah, we've got these indicators, and you can change it different numbers. There's a lot of people in the world, and there's a high probability 2 of them are going to find the same thing on the same thing. Everybody learns from somebody. If you pass it off as your own, yeah, that's a problem. But, you know, it's the old thing, you know, with the propulsion gap, isn't it? Which everyone goes, oh, that's a fair value gap. No, it's not. It's a wide range bar. The guy that called it a fair value gap stole it from the guy that made it up, called it a wide range bar. I've stolen it from my mentor who taught me about propulsion candlesticks. That's why I called it a propulsion gap. But, you know, it's not stealing, is it? It's just an observation. You call it what you like. And this is the thing with forex or with trading. You can't copyright anything, because you can't copyright a candlestick pattern. You can't copyright something that happens on a chart. It's just something that happens on a chart. If somebody identifies that when an RSI gets extended above a certain level, it's a good opportunity to sell, no one can prove who came up with that idea in the first place. So people just rip off other, well, not rip, it's not really ripping off, is it? It's just doing the same thing. You know, we all want to do the same thing that works. You know, if I didn't think it was worth doing, I wouldn't do it. You know, it's like, I use the RSI because I've analyzed tons and tons of oscillators, and I found this one to be the most reliable mean reversion one. But people argue until they're blue in the face that this is something that you buy it above the 50 and you sell it below the 50. You can also do that. There's a great example, isn't there, on the chart right there? Yeah, when that went above the 50, you should have bought it. When it went above the 70, you should have sold it. They're both correct. They're both the same indicator. I can show you 100 examples of it working and 100 examples of it failing. What most people that are trying to push stuff out on the internet are trying to do is convince you that it's the only way. And it's not. It's just a way. Everything's different. There's no right, wrong. It's just different. There's a lot of people position trading right now because I keep sending me their P&Ls going, I'm having an absolute whale of a time at the moment with ADR and RSI on the hourly. Well done, I'm not. But they're making a killing. It's not right, it's wrong. It's just different. I'm losing my mind with ICT. Friend lost seduced by the dark side. Yeah. Everybody gets seduced by ICT at some point. It's just he's great at causing controversy and he's great at doing what he does, but he will come back, this friend from the dark side, because there isn't a person on the planet at the moment that has shown me an ICT concept that works. Yeah. Again, challenge to everybody in here. There's only 46 of you in here. But if you or anybody you know in any forum has successfully traded ICT concepts with a positive P&L for 12 months, please inform me, because I've never found a person that's done that. Yeah. People call it smart money concepts, but nobody's trading ICTs, models, or whatever they're called, successfully. Nobody. Not even ICT. He's proven it, hasn't he? He entered the trading competition and blew his account almost immediately. So he can't even make his own concepts work in a public forum. They will come back. They will realize all they're going to do, right, is they're going to get lucky. But the penny will drop when they realize that the reason they got into the trade was because a set of rules indicated a sell. They sold it and it went the right direction. And they went, oh, this works. And then they will find another set of concepts that says to buy it. And they'll buy it. And it will go in their direction. And they go, oh, I found it, the Holy Grail. And then they'll have a losing run of 10 trades that won't work. And they'll go, why is it not working anymore? It's broken. There's something wrong with it. But they won't realize they've just traded a coin flip. Because it can only go up and down. And it moves through time. So therefore, if I give you my indicator and say, short it when the orange box appears, you'll go, oh, wow. And I say, long it when the orange box appears, and you'll go, oh, wow. But you'll only go, wow, if your target was here or here. If your target was there or there, you're going, yeah, it's all right. Because you haven't made any money yet. Because it hasn't got there or there. All ICT does is give you a framework to enter. Never tells you when to exit. So therefore, what's the strike rate of an ICT strategy? Depends on where your exit is and where you put your stop loss. He'll tell you where to put your stop loss. If it doesn't get stopped out, he'll claim it was a winner. I can show you 1,000 trades on the chart right now. If I go through every single pair here, that one was a winner. That one was a winner because it went down after the signal. It's a tiny little winner, isn't it? But it won. Yeah. Winner. Can't see the last reverse. Oh, yeah, there's the last reverse alert long. Winner. They all won. They all win because it only paints the ones that win. Because that's what it does. It signals when structure has changed. But that's all ICT stuff is. It's telling you that when price gets to a certain point, a lot of the times it will come out of it, but a lot of the times it won't. It's the same as every other strategy on the planet. It's just really complicated. And the reason people dive into it and go, this is amazing, is because the complex explanations about exactly why everything is happening. Utter rubbish. The whole lot. You know, for someone to come out and say they invented the algorithm that drives the forex market, surely there's alarm bells ringing somewhere that people go, really? And he's giving it away for free? He lives in a nice big house because you all paid him $250 to learn how price goes up and down. He's basically made a lot of money teaching people that it's heads or tails. It's great, isn't it? But how many other people are doing that out there? I do. I come in here all the time and say it's going to go there or there. But at least I'm honest, I don't know where it's going. IPTA, yeah. Was it, no, it's not IPTA, it's, is it? It's the interbank price delivery algorithm. Yeah, that's right. Yeah, IPTA, yeah. Interbank price delivery algorithm. I don't know if any of you know anybody in banking, but I do. They've never heard of it. So I can say hand on heart, if someone was to take ICT to court and say, prove it, he would lose because the rest of the banking industry would go, yeah, what is this thing you programmed for us that we use? None of my tech guys know about it, and they're the ones that make all the money. Anyway, we've covered that a few times. So Euro US dollar is going nowhere. Pound odd is going nowhere. Again, short the highs, buy the lows until it proves you wrong. Pound CAD, very much the same. We are going nowhere. Propulsion gaps, as you can see, all getting filled. Fair value gaps, wide range bars, large candlesticks, call them what you will. The things that move up and down all the time, the big ones are those. It's just moving between them. It's called a range. It goes up and down. Take those. Pound Swiss going up. Pound Swiss is a little bit more tricky because obviously the Swiss franc. So this is the safe haven run. Again, it's the same question with all of these Swiss francs pairs and all these yen pairs. Are we going to complete the V-shaped recovery or not? You take a choice. If we are, every reverse alert short that you get is going to fail. Every reverse alert you take long is going to work. That is basically what it is. It's a signal indicator. We've had a signal to go long this morning. It's working. Why? Because the market's pushing up. So again, stick with the trends at the minute. Likelihood is, I think this market is just going to grind itself back to where it was, and we're going to go somewhere from there. But at the minute, there's a hell of a lot of institutional traders offside. Yeah, there's a lot of unfinished business in the futures markets in these areas that needs to be done. There's a big imbalance here. So I get the feeling we are probably going to grind back there. The Swiss franc will just get drained basically back into potentially the stock markets. But the stock markets are not rallying, are they, at the moment? So it's a really, really hard thing to call at the moment. But pound Swiss at the moment, yeah, moving up. And I don't think there's any reason why we shouldn't continue in that vein at the minute. Same with the pound yen. We've got a big news event with the yen interest rates, but they're not changing them. So as long as they don't change them, there's no reason to be buying the yen at the moment, apart from a safe haven run. So up we go. I'm sorry, everyone. I still use very simple methods that talk to me and work. I'm so happy. Mark, can I get a bottle? The secret sauce, yeah. Simple is best, Franco. My stuff's not complicated, is it? Yeah. Everything I do is very simple. When that squiggly line gets above there, wait for sellers to enter the market. Not rocket science. I have indicators which tell you that something's just happened. Simple, simple, simple. Yeah. Always the best. I've tried, I've done everything in my trading career. Every single strategy that has more than 2 indicators in it is a waste of time, because you're just adding more and more and more and more variation into something that's very simple, bullish or bearish. Goes up, goes down. I haven't got a clue where it's going, but I can tell you how it moves. That's the only thing you know. You can study price action as much as you like, but every time you see a price action pattern, it's got a 50-50 chance of working out, because it's either going to do that or it's going to do that after that happens. Yes, when that happens, it means the sellers are in control for that 15 minutes, 30 minutes, 3 hours, whatever that period is that you've just watched, they're in control, the sellers. Does that mean the sellers are in control for the next candlestick? No, it's got nothing to do with it. It's just told you what's happened in the past. It doesn't tell you what's happening in the future. Yeah, you can predict the forecast of the weather as much as you like. There's a load of clouds coming over. It looks like it's going to rain. It doesn't rain all day. You were wrong. You had a 50-50 chance it was or it wasn't going to rain. Same with this. Yeah, every time you get a bullish or a bearish engulfing. Someone asked me the other day to make a bullish or bearish engulfing EA because they wanted to test whether bullish. And I remember going back to the days where I was like, wow, bullish and bearish engulfings. It's obvious. Look at that whacking great bearish engulfing there that didn't work. Because it's just telling you what's happened in the past. Nothing to do with the future. Taking risk, put an area where you're going to get out, put a money amount on it, and then down here, put a money amount that's bigger than that amount. That's trading. That's all you got. You stick 3 indicators on your chart to do the same thing, you're overcomplicating your life. Did I get triggered on the ORB? Short on the FTSE. No trades on the DAX this morning. But yeah, short FTSE, but it's not going. It's just dead. Going anywhere today. Dead as a doornail. New Zealand. So yeah, again, very, very sideways. We are breaking out to the upside on this. This looks to me at the moment like we've got a little bit of a rally going on the pound. You can see all the pound pairs at the moment are for the last 2 hours or so strong. So at the minute we've got some rallying on the pound, but Obviously, that's just short term. So we've just filled the propulsion gap on the pound New Zealand to the upside. So where we've sold it here, we've now broken through that level. So any ADR hit today, looking good for shorts, because we're probably going to be exhausted by the time we get up there. And then potentially look for us to come back up into this propulsion gap. So again, are we just going to reverse and get back up to where we were? In which case, obviously, the commodities will start to rise, the stock indexes will start to rise, gold will start to rise, the US dollar will start to rise. Everything else will start to fall against it. So it's a rounding, what we call a rounding bottom going in at the moment, potentially. Which basically is a very, very, very slow, orderly reversal back up to source of the move. But pullback, so when you're looking at this, if you believe that is the case, you want to be buying propulsion gap bounces, buying reversal alerts to the upside. But mean reversion wise, short highs back down into there. So there's your targets. So propulsion gaps are downside targets if you're mean reverting. They are ups, they are entry points if you are going with trend. New Zealand CAD sideways, again, everything's sideways. So again, buying the lows, potentially that is, this is the previous monthly high here. So we've got the 2 week, no, sorry, that is last week's low, which was the open for last week. As a potential downside entry, you've got this area here, which we're bouncing off right now perfectly, putting a little hammer in. Yeah, so lovely looking entry there. Drop down 5 minutes, you'll have a reversal alert on that about to form. So when we break the high of that candle, we'll be reversing. So that is good for longs at the moment. But again, just worried. Everything in my body is telling me that this is coming back down to the origin of the move, you know, rounding top type movement. So if that's the case, it will potentially go fairly slowly in the same way that it's come up. But as you can see, it's going to be quite hard to get out of that type of move with a position trade. So not the greatest thing in the world to trade at the minute. Propulsion gap's completed now on New Zealand dollar Swiss. So we are back to the origin. On this one, where it goes from here, who knows? But it's not moving very far, is it? So for me, I'm not trading this one at the moment. I've got the Euro Swiss variant, but that is a great little resistance bounce there. So you've already kind of missed half of that move because it happened on Friday. But that propulsion gap holding up. So watch this area down here or down here for a re-add here. So somewhere either 3/4 of an ADR or 175% of ADR, 200% of ADR to the downside. So if you like this long now, buying that and that. If you're short, obviously you should have been in it already, but you can look for pullbacks today to short it. Again, there's your propulsion add there. That's still in play at the moment. Again, we're not really going anywhere, are we, at the minute? So New Zealand dollar yen, again, same thing with this. We're kind of in shell shock mode. We have gone back to the origin of the move on it. Propulsion gaps filled to the upside, so the only downside targets are available. So there's your monthly high. That's a double monthly high as well. So very, very strong resistance. Yeah, so gap down, shorts, 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 shorts. Yeah, so double monthly highs, which means that obviously the yen is powering up, as we know, because they're raising interest rates. So you got a high, low, lower high potentially coming in, or whichever one you want to pick as a high. That is potentially your lower high. So pushing back down into the source of that propulsion move. But again, any second, Trump could open his mouth and completely undo everything. So looks good for shorts at the moment. Lovely reversal alert got in. Look, that propulsion. There's your retest. So just watch that area for potential buyers. New Zealand US. This is a horrible, horrible chart. Look at the size of this move. This is scary to long in case that's going to happen. So it just scares me, this chart at the moment. For stop loss trading, not a problem. But for position trading, I would not want to long that with that much distance to potentially pull back down into. Shorting it, fine, but it's just such a long way. Taking a short on it and holding it for 3 weeks, you make an absolute fortune on that. But very difficult to get into because it's just stuck at the moment, isn't it? At some point, it's going to go. It's going to just do an ADR and it's going to take off. But it's going to be because of that. And we just don't know at the moment which direction that's going to go in, do we? So I like it as a short. And obviously, we've had a reversal alert short on it, which is absolutely beautiful, and a retest. We put in a lower high. So market structure, very, very clear. That turned into a bit of a symmetrical triangle, but we are kind of breaking that low now, but not very convincingly. So definitely looking short at the minute, but this propulsion gap is holding very, very well. So the buyers here who broke that high and put the new high in are adding to their positions. Yeah, but there's a lot of selling pressure. Buyers can't push back. So it's a downside wedge, which means bearish at the moment, which means US dollar strength. I can't see any reason for anybody on the planet to be buying the US dollar at the moment, which is what scares me about doing these sorts of moves, because that means you're bullish on the US. Why would you be bullish on the US? He's just destroyed their economy. You can't buy the US dollar at the minute. You can, but he's got to help it along its way somehow, and I just can't see how he can dig himself out of this hole. So, but technically, you know, if you believe technicals are still going to work, that is the short of the century at the moment, and there's your target. So it's one of those you get in, add, break even, and just hold it, because that's where you're headed. So we got a couple of bounce points along the way, potentially, at 200 ADR. So get a bounce out of that, look for a short entry. Obviously, it's got to get down there first, but that looks really good for shorts. But got to be bullish US. I'm almost at the point now where I'm looking at every chart and I think I'm, because of obviously I've been trading for such a long time, I'm so focused on the US dollar because it has been the world's currency for decades. I'm so focused on what the US dollar does, which I think most traders are. I think I need to try and decouple myself from the dollar and just look at the technicals and look at it and think, right, fundamentally, I haven't got a clue. No one's got a clue fundamentally what the US dollar is going to do moving forward. So what should we be doing? Ignoring fundamentals and focusing on the technicals. What is it doing right now? It's broken short. Market structure short. We've got a downside wedge forming. I am having a conflict of my devil on the left-hand shoulder going, you don't want to be buying the US dollar, and the angel or whatever on the right-hand shoulder going, technically, that's a beautiful short. You've got to try and not listen to that one at the minute, because the US dollar isn't going to move because of fundamentals. It's going to move because of what's being done by other countries and by Trump at the moment. So technically, the market seems to be thinking that there is something going to change. So I think maybe we should be just ignoring I can't buy the US dollar at the moment because it's not in a good place, and just doing what the technicals say. I don't know personally whether it can devalue too much more in that sort of speed. I don't think there's enough money in the dollar now to be able to warrant a move of that magnitude again. So it would indicate that if we are going to get a pop, it's going to stall out on its way up, and it might be quite nicely structured if it does weaken further, because I don't think they can dump much more of it. So it's a tricky one, but I like that as a short. Obviously the technicals, the structure is saying, yeah, you want to short it, so sell pullbacks. Looks good. US dollar CAD, obviously the inverse of that. Yeah, so we're looking to come up into propulsion and origin of move. Going to hit a hurdle along the way. This looks very similar to another chart on the euro from we've recently had. Was it the euro pound that I was stuck in, wasn't it? Yeah, is that move? I think it's this move here where it's just suddenly took off. And then if you look at the US dollar CAD at the moment, I think that's likely what we'll see. But again, my brain is saying don't buy that at the minute. But does it mean that that's going to be strong? I don't know. It's difficult to tell, isn't it, at the minute? So, but yeah, technically it's a long, lovely long. So we've got a lovely reversal and retest. They've bought that up twice. We've broken the highs. They've rebought those highs. So what's the next step? To break those highs. Yeah, but it's going to take a week to get that far. Yeah, you're going to do an ADR, maybe an ADR and a half in a week. So it's, you know, don't expect to make fortunes out of any of this at the minute because it's just not moving far enough. Forget his name now. Doctor, his buy orders are at our stop loss levels. David Paul, yeah. Yeah. That's why ranges work. And this is why we range 90% of the time, because the market is just bouncing between buy and sell zones. So that's what David Paul did. Just he's selling when everyone else is buying. Yeah. So breakouts. Breakout strategies have a 30 to 40% strike rate. So what does that mean selling a breakout gives you? Yeah. Overall, long-term edge. So if you sell a breakout, you're more likely to succeed. That was his logic, and that worked. But, you know, again, not going to make you a fortune unless you've got a fortune to put into it. Getting a 60 to 70% strike rate is fantastic. But the problem with selling breakouts is, where do you put your stop loss? Your stop loss has to be a calculation based on ADR. Because when you sell a range bounce, you have a place to place a stop. Yeah. So, and this is why ADR is, in my opinion, the only thing you really need. Because if you're going to buy this on bullish price action there, yeah, because that's where everyone else's stop losses are, because they bought that, they've put their stops there, so you buy it here. Where do you put your stop? It's got to be a calculation based on the average daily range. So give yourself breathing room of X. I mean, if you want to stick it super tight on a price action pattern, then yeah, you can make a lot of money doing that. But you will fail a lot because it will stop out, because it's market goes all over the place, doesn't it? But if you give yourself a quarter of an ADR breathing room on a price action pattern below a low, you've got a very high probability of not getting stopped out. If you don't get stopped out, your strike rate's going to be high, but your reward isn't necessarily going to be 1 or 2 or 3 R. It's going to be a bit. Yeah. And again, nothing wrong with having a negative risk reward ratio if you have a high strike rate. The only reason you need a 1 to 2 risk reward ratio, when you place your stop loss there, that has got to be twice that, is because you need to get a higher than, because you normally your strike rate's about 40%. You've got to get more than double the distance to make profit. If you get in to your trades and you have a stop loss at half an ADR and you take a quarter of an ADR in profit, but you get a 90% strike rate doing it, that is profitable. Yeah, because you don't get stopped out on your trades, which is the whole purpose of ADR, isn't it? If you get down to ADR, you take a long at ADR. If you put a stop loss at half an ADR, let's say you take a trade at 125 and you put a stop loss at 175, chances are you're not going to get stopped out, because the odds of it going beyond that is 6%. So you've got a 96% chance you're not going to get stopped out. But it doesn't mean it's going to go like that. It could just do that. It's still going to take a loss on the trade. But if it does that and you make a quarter of an ADR, you just made a quarter of an ADR with a 90% strike rate. That's how David made his money. What he didn't do was set fixed TPs and stop losses all the time. He would get in, wait, and get out. Yeah. And that's how most successful traders do it. You don't use a stop loss. If you use a stop loss, what you're doing is you're saying, place an order in the market to get me out. with a loss? What if it hits your stop loss and bounces 3 ADR in your direction? You just took a loss for no reason, didn't you? But that's because you told the market to give you a loss. If you wait until 6 o'clock this evening and see where price is, chances are it'll be in profit. It might only be 10 pips in profit. But if it's in profit, you haven't made a loss. Your strike rate will go through the roof. But you've got to take the right trades, and you've got to be very disciplined, which is what he was, obviously. But this is why I keep going on about the stuff that I keep going on about. Dr. David Paul. The guys that make money in this are intelligent. They're not system hunters, system hoppers. They're people that look at statistical analysis, probabilities, and rewards, and all that sort of stuff that you can back test, and you can go, right, if I do this, that happens. If I do that, that happens. So the best thing to do is this. And I know that I'm going to lose X amount of time, and they have a framework that they work within. And they don't care if they take 6 losses in a row, because they know that the edge is there long term, because they're intelligent and they've spent the time. People that pick up an indicator and go, I'm going to stick it on the chart and press the button because it told me to, never going to make it. It's not for McDonald's workers, this job. Frankie needs a new 250cc scooter. Go for a bigger one, Franco. Hard to do with this present state of affairs, yeah. It's hard to do anything with this. I stopped out on the short on the FTSE. So see if I can get along on it. This prime example, you can't do anything with this, can you? If it's not moving, you can't make money. This is the one thing that always annoys me when people get in touch and say, can you put a news filter on your EA because it keeps taking trades around news? What do you need the market to do to make money? Move. What does the market do on news? Move. Why would you filter out the one thing that makes you money? News. Nuts. Yeah. When the market's doing this, very hard to make money. And everyone will be going, oh, I'm going to become a range trader. And they'll do that and it'll work for a couple of weeks. Pound New Zealand ADR. And then it will suddenly start failing again very quick. Let me just do US dollar yen, then we'll look at the pound New Zealand. US dollar yen, yeah, this is a real mess, this one. It's just a mess. We had an accumulation, we broke out the lows, we're back in the accumulation again. There's downside targets, there's upside targets. It could go absolutely anywhere. It's just not something I want to trade. It's too expensive to short it, and I don't really want to long it personally. So I'm sticking clear of the US dollar yen. Yeah, that is where I would expect it to go if we're going to do the reversal. There's too much news on this week, really, to get in and know where it's going to go. So obviously you never know where it's going to go, but I mean, it's just too much news potentially to move this in any direction this week. So not really great to trade, I don't think, at the moment, the US dollar yen, but we'll see. Pound New Zealand, so a quick look at that. So there's your ADR hit to the upside. So those are the highs. That propulsion gap fill is now complete. So the sellers here that started that move are not there anymore. They're out. So now is a good time to look for sells. So you got these highs here, and then that 2-week high, which is the previous support. Yeah, so there's your support. They're buying it up, buying it up, buying it up. Sellers took control. The buyers turned to sellers. Opposite. Yeah, so sellers are in control. So we'll be looking to sell that monthly level. So if we can get 125 ADR on that today or thereabouts, that will be a good looking short. So pound New Zealand shorts are all right, not too bad. So that's something I could look at taking. So reversal alert, we've got potential 3-bar reversal going in at ADR, look. We've got 3.5 minutes left on that candle. If that turns into a nice big bear candle, nice 3-bar reversal. Reversal alert obviously is the next one. Those are prop trader fears. I mean, what I was talking about. probably. Right, that's it. That's all I've got today. There's not a lot else to discuss. It is 9:45 anyway. So stopped out on the FTSE. Nothing much we can do with that today. So if we do get a break long, news trading, yeah, news traders, prop traders are scared of news. So yeah, if we do get a break long on the 30-minute range or 15-minute range, which is the same thing, but we're buying straight into resistance at the minute on that. So what is that? 112. That's okay. So I'm going to stick my partial at the highs today. So if that does break long, what that's going to give me, I can't really show it, but what that's going to give me is obviously that's the risk, that's the reward. So I'm taking 75% of the trade off there, which is going to buy back 75% of that loss. And then we'll see if we can get a grind out the top. But obviously it's got to break first. And at the moment, it just looks like it wants to stay in rotation. There's just no volume at all today. It's just crap, isn't it? These are the points in your back tests where you see your P&L just doing this. Can't do anything with it. It's just part of the game. The market will not work if it's not breaking. So stick and wait. Are you still doing 5 to 10% on your market reversal account? I haven't been position trading for the last, since the tariffs, I haven't been position trading. So just started again today. Today's the first day back in position trading. So back to it this week, basically. And we'll see where we go. But I mean, I think 5 to 10%, and well, 10% a month at the moment, I think is going to be a struggle position trading because there's not enough movement at the minute. The last 2 weeks anyway, but it's hopefully will pick up again. But ADRs are back to normal, so all the ADRs are reset. So it's just a case of waiting for stuff like this, to start moving. So looking for areas to sell up here. So 125 ADR. I'm just going to stick an alert somewhere up here. Stick it up there. And if we get up into this area here, I shall look to get short today on that one. See where we go. There's no reason to be bullish on the pound at the minute. There's no reason for the New Zealand dollar to be particularly weak either. Well, there is. Commodities are getting hammered, but they have been hammered. So I can't see them getting hammered too much more at the moment. But who can tell? Mr. Trump is obviously in control of our lives. So we'll see what he does. Just wanted to see if there's any more news this morning. No. Bank of Japan plans to buy bonds in May at the same pace as in April. So, I mean, not that you can really tell. I mean, you just can't tell at the moment. This has just screwed everything. You can't tell what they were doing in April because of the huge mess they made, or Trump made. But I also stopped, didn't know you also didn't use it. Can you explain the main reason you stopped using it? Because it's you can't position trade in a market that's parabolic. The market is no longer parabolic, is it? So it's too squeezy at the minute. What has been too squeezy, but I think that's over. So. Right, I will be back this afternoon at 2:30 for the New York session. We'll obviously trade the US indices, see how we get on this afternoon. Hopefully they will be a bit more reliable. Something moves. Yeah, we'll see how we get on this afternoon, really, with the US indices. But at the moment, as I say, today and tomorrow is very, very light news-wise. So there is potential today and tomorrow for very little movement. See where we go. But I'll be back this afternoon. Anything you need, I'll be in Discord or Telegram. Yeah, I will see you later. If not, I'll see you on Wednesday morning. Have a good day.